and be able to release the best version of the product that you can in the time that you have. This is the best way to do it. Was that chart that I sent, the graph that I sent you earlier?
I want to change that for the Dreamcatcher. Now I know that we've spoken about this. I don't even know the best way to say it. This page that I'm showing you with the branch protection rules and require a pull request and all that, this has a fundamental flaw that means that the project controllers have some sort of say on what a release means. And you have brought up many times that the software industry is unlike critical engineering systems where R&D and development can't even really touch production. Whereas in software, that is about as far from the truth as possible. Right? Right.
Yep.
Yeah. And so what I imagine us presenting is the Dreamcatcher App Store or Dreamcatcher Library Store is, first of all, anyone can turn up and publish anything, anytime. We'll do some basic checks on does it compile, does it run, etc., have a reporting procedure for malice, those kinds of things. But if you're not paying for security, you can, just go right ahead and, lose the keys to the kingdom, whatever. The system I want to implement is one where whenever you publish an app, we take over that release procedure at the point where, let me grab your picture. What channel did you put it in? Sorry. Oh, there it goes. I got it.
Okay. What channel was it?
It was Code Topics.
Oh, okay. That sounds about right.
Yeah. And so the pull request model still puts a lot of power in the hands of the project leads. And that's the power base that I want to erode. But I don't want to take from them. I want to force them into a collaborative position where they will continue to receive proportional reward for whatever they've done. Depending on the trust models that people are applying, they may well be the ones that most commonly push a release. But for people who are paying or buying security insurance from the Dreamcatcher software app store, the version that you receive is not the same as the version that the developer just published. It's always intercepted and modified by a team of people whose incentives are there to scrutinize and find problem with it, so that no single developer can just go pull request, publish, and then there it is. It is forced to be indirect.
Right. So can I explain to you what in that graph that I think you're saying?
Okay.
Okay. So right now we're in the development and peer review phase, right? Of the Dreamcatcher.
Yep.
We haven't gone into formal QA or DAO voting or anything like that. All we're doing is we're staying in these first two fundamental areas where we're kind of kicking around documents and we're making changes and we're kind of approving them amongst each other. So, okay, so let's say I'm a project person and we're going to release something onto Dreamcatcher. I would be in the development and peer review phase of that project. And I can be in that phase as much as I want. And I can even release that to the Dreamcatcher in that phase. But it's going to have that pre-released version to it, attached to it, whatever that is, whatever that flag is. It's going to be, it's not been approved, whatever that approval. So when it goes, if they want it approved by the Dreamcatcher DAO or authority or QA, personnel, whoever's out there.
The security providers.
All right. So if they want their code audited, they want someone to review the code. They want if they want that kind of work done to it, they would have to send it to the approval process.
Right, and it's not the project publisher that's pushing it that way.
No. That's QA. That's what the QA branch comes in. That's an independent person.
But it's the consumer that pulls it through the QA, not the publisher that pushes it through QA.
Well, it would be up for QA. So it would stay in like some sort of mempool where a QA person could come in and grab it and start doing QA on it.
Yep. And in this model, QA puts a stake of an asset on the line for telling you that this is valid. And if you want to buy that assurance from them, you pay a small amount every time you use it, and they earn for providing that liquidity or that guarantee that it is secure. They will lose their stake if it turns out to have been a false assertion, or they simply followed someone else's and didn't do the work to check it themselves.
Right. I mean, that's what I did with a few projects already. You already saw the attestation. That's exactly what I did. No one asked me to do that. I did a pull request myself, and I said...
Right, but you should get paid for that, and you should be able to sell your reputation and your assertions to people that you have this reputation and you assert this software is free of bugs with conditions, and you're putting $1,000 on the line if it isn't.
Right.
And then you earn for that stake. You staked security, and you earn.
It's a bond. It's a bond.
Yeah, and you earn for it. And so in that way, the QA becomes decentralized, like properly decentralized, and in the interests of the consumer, not in the interests of the publisher.
Right.
So immediately after peer review is a line that is now outside your project.
Right. So so each one of these stages have firewalls, by the way.
Okay.
So I mean, I didn't put the lines in there, but there would be firewalls between each one.
Yeah.
I mean, not so much for the doc development and peer review because that's a small team, and that's would be. But once you kick the can over the fence, you are in QA. You cannot QA your own thing.
Yeah.
Now, somebody might be malicious and start their own QA account and do the shit anyways, so there's that issue. But
reputation and time is the mechanism by which that is blunted.
No, I understand. I'm just saying that I'm from a malicious after sort of thing. I could just make a secondary account and call it QA guy, and then just QA my own shit. But then I'd have to bond my own
money, and then you've got what reputation exactly, and
right. And then the more critical to function stuff is when the DAO kicks in. Now, the DAO voting was about like core fundamental processes of the Dreamcatcher. It wouldn't necessarily be apps.
That's unless where we differ significantly.
Right.
The quorum vote ought to be not decided by. It should be very able to introduce forks to the system, and it's based on what a group of users want to do, not what a group of experts or any other group. It's just pure utility that counts. Utility is your vote. That's missing here. That's from a consumer standpoint. This is strictly from the standpoint of running the DAO that would run critical to function apps. But it wouldn't. There wouldn't be one.
No, I was talking about with the funding model earlier. This is referring to how it would work with the firewall, the DAO with the firewall that would actually fund projects that would, you know what I mean? So
right. So I think what you're saying is the quorum vote is when you agree to pay for work that was asked for.
Correct. That's right.
All right. I got you.
Okay. Sorry. So I was trying to say, like, you got to think higher. You're thinking specific projects. This was a top level document that was strictly protocol level type stuff. So I'm just trying to ground that. But that being said, there's no reason why the user community can't be a DAO in and of itself. Of course, the Dreamcatcher DAO would be all of the people involved in it.
I think if you had added the words contract payment or dispersal, under around quorum vote, I would have understood that you.
Yeah, well, that would be a quorum vote, right? I mean, if you pay with that's a vote. So, I mean, however that vote happens, that it doesn't matter
Right.
what the quorum is. The quorum is that.
What would be nice to get set up and running is that if QA was decentralized enough that we could trust it, we could start to have the quorum vote as the first stage, where we vote to put some money against it, and it's really not. It's not the DAO that needs to say, yes, we're going to pay now. It's the decentralized QA. And so it's a fairer way for the developers to have certainty around the fact that their work will be accepted, because it's a decentralized acceptance procedure.
Right. Well, I mean, that could be part of the treasury as well, from the high-level DAO, from the actual Dreamcatcher DAO could be part of that. That could fund these insurance contracts, if you will, or have even credit default swaps where people go, hey, I don't have a bond, because just like a bails bondsman, right? When you go to get a bails bondsman thing, you don't pay $100,000 for bail. You pay a bails bondsman $10,000, and they put up $100,000 to get you out of jail, right? So that's something the Dreamcatcher could do as well. We could find subject matter experts who have pre-approved reputation, like we know that they know what they're talking about, and they're already in the Dreamcatcher.
Right. Yeah,
so therefore,
right. Okay. So all of these procedures that we were thinking about doing for getting our code externally audited, we should be looking to actually fold them into the long-term stable process that we want, and we've sort of self-seeded, because from their point of view, nothing changed. We paid them. There was some reputation and all that. But from the point of view of how everyone else is looking at it, they look like working in this security liquidity provider model.
Right. Yep.
Okay.
Yep. So basically, the DAO Treasury can go, yeah, we think these people are trustworthy, and we've done that by putting up 90% of their bond, so 90% of their insurance.
Right.
Then,
so as part of the
and that can go ahead.
As part of the funding, where use of funds that we're looking to raise for, some of it would be for seeding some of these key services. Like, obviously no one's got their own bond to put up, so we'll interview them ourselves and put up bond on their behalf, type of thing, right? That's what you're talking about?
Right.
Yeah.
But I mean, they would stake as well. I mean, they would have to come up with 10%.
Yeah, that is
kind of situation.
Something, but we'd make the service more viable to a larger audience by amplifying their stake.
That's right.
Yeah. Okay.
That's right. And then we would get some of the fees back, and those fees could go back into the treasury and go back to the liquidity providers and stakeholders.
Like, I'd hope that's a good earning model for.
Oh, it would be. It would be. I mean, auditors make a grip right now. They're making $200,000 or $300,000 per audit. So yeah.
Yeah, but we kind of want to lower the cost and vastly increase the reach.
Well, I mean, it's going to scale down. Absolutely. I mean, it's early days. So yes, I mean, there's only going to be a handful of people on the planet that can do this stuff right now.
Yeah.
So I mean, the competition's fierce to get their eyeballs right now. So I mean, that's the whole reason why I've actually started the GitHub where I'm doing the attestation stuff, where because I'm sick and tired of these fly-by-night audits where people are just doing this like really really surface level, top level, kind of vertical slice audits of things, and it's getting other projects in trouble where people are actually losing millions of dollars.
Yeah, man.
You know?
That's all bad.
Right. I mean, because these audits aren't deep enough, in my opinion. It's just like, you can't tell me that someone's got a contract got audited for one day and they found all the bugs.
Hell no.
There's no way. You can't tell me that an auditor for 8 hours caught everything.
And again, it's almost like the more, like that quadratic participation thing, it's almost like the more auditors took a look, the more, like, the square of the number of high rep auditors is worth more than just like one or two big shots. Right,
exactly. Yep, that's right.
So
that was the whole point of it.
Yeah.
So that whole thing can scale as well. So the more auditors you get on the project, the more then that funding would be like multiplied.
Yeah. So this diagram, the release procedure, if the DAO was moved to the first stage, then I would more agree with it.
What do you mean by the first stage? So how would the DAO tell me the interaction?
DAO comes before development because DAO takes a vote on what they're going to pay to have done.
Yeah. Okay.
So, like let's imagine that we start a company and we raise some funds to.
Sorry, are we talking about a high level code sort of situation, or are we talking about actual nitty gritty project code?
Nitty gritty project code.
Okay.
Right. Someone has to, no matter what, and no matter how much we decentralize stuff, the only place we can't get rid of a bunch of people making a decision is what issues or what work do we want to fund to be done. And so that's the thing that is how I would want to control the reins of the project, by having a kitty of money and being able to sprinkle it around on which NFAs I need built and what they're worth to me. Obviously, I'm managing the money on behalf of the company or the collective, but that's
right.
How I want to be driving the projects. I don't want to be I want to do that bit first, because if you want to add something to the project and do a pull request that I didn't ask for and it ends up in the main line, then fabulous. You're going to get more attribution than if the DAO's money was used by you to produce it.
Right. Okay. So you're talking about the pre-step before. I think you're talking about the pre-step before we even hit this diagram is what I'm thinking.
Yeah. The pre-step is the DAO doing specification.
Right. So the reason why I didn't include that in there is because it was kind of a given. Like this is this is only work that's already being approved, if you will.
Right. But I want to remove the DAO's involvement in approving or calling the work complete, because there's an incentive there for the DAO to say, oh no, we didn't ask for that, or whatever. I want the DAO to say, we want this work and here's this money, and then QA is external, decentralized. It's a pool-based system.
Yeah, but doesn't the DAO have to negotiate that contract?
Yes, and then the DAO can either make an assertion where it says we just think it's worth $100, or people can come back and say, I think it's worth 150, and DAO says, yeah, sure, fine, 150, right? But it's did the work get done or not is a massive, massive problem in project management of any kind, particularly wildly distributed software projects. And so by having a distributed QA, we can leverage that to give the developers predictability and standards. So we don't actually have to police, oh, hey, this is shitty or this is bad. It's the QA pool that's taking care of that for us, and we're like, well, don't talk to us. We only pay out when that smart contract triggers, so go deal with the security pool, because their reputation's on the line for your shitty code, so, don't make it pass. Fix it. Right? So let me think. I think I got what you're saying now. You're saying that the decision where the code is released into the wild is based upon the QA check. So, yes.
Right.
Which is distributed, decentralized, and also is the same check used to trigger the payout contract if an amount or a prize or a bounty was specified up front.
Right.
And so the same person that says, I will pay you, cannot be the same person that says the work is done. That is perverse incentives. Okay.
I mean, I have no problem with that. I'm just saying, okay, there's no problem with that at all.
Okay. Now, in our current model,
I just don't know how that works in GitHub.
It doesn't. So that's a piece that we need to build. Right now, where we are doing the DAO on Discord, and the currency being passed around is, I don't know what, but it's not real money.
It's time right now.
Yeah, it's something, but it ain't real money. But it's and the system's not formal. It's kind of like, like you guys expect me to make the code. Ben, me and Ben are expected to make the code. You guys are expected to figure out the philosophy and the definitions and how does it all fit together. And it's not tight enough that we could put down our specs and put money against it, but we need to, through running this DAO development peer review QA internally, we need to get to a point where that cycle is actually formalized, because then it becomes safe to take on money from investors, because we protect their money with this decentralized QA system, but also we protect ourselves from their greed or their harassment, because we're like, look, the QA system doesn't care what you want. They don't care that you want to release early. Like, it's, it is what it is. Let's just get on with the work.
Yeah. Okay. Well, I would agree with all that. I mean, that would be I think that would be the nice to have model. Right. But since we're bootstrapping this, we don't have a QA system in place for that.
That'll be the first thing we have to make, right? That's the...
Right. No, I agree with that. I mean, I'm just saying that if it seems like that has to be there's a catch-22 here where that has to be there, but we also have to fund it so it's there at the same time.
Yeah, that's where we'll kick in that funding model that we... That's the bootstrap funding model, using a conventional company first. Like, I really like what you put forwards in the pitching deck in broad terms. I think that the additions of more things like the retail, the liquidity providers, and the pool, they can come after. And we're like the nice, simple, one share, $1 conventional company. Here's our plan. We're going to build this DAO and this release pipeline for software. And within it is these NFAs that move around the place. This company is there to build up a reservoir of valuable NFAs. Have at it. And then we layer on these other methods of participation, funding, voting, all that, using that initial seed capital.
Correct.
But so right. the catch has always been, when is bootstrap possible without building without building a rod for our own backs? And I think we're actually there.
You realize that the term bootstrap means that it's impossible, right? So
yeah. But I think we're actually at the point where we know we're put money into this company. We sold the promise based on a dream, based on a slide deck, based on some documents. But once the money lands, we then set about the work of making it real. I think that's actually a feasible thing to propose to someone now.
Yes, I agree. I think we're at a point where you could actually have a serious conversation with investment.
Yeah, and I can sit there hand on heart and say, this is going to make money. I believe this is going to make money. So...
Oh, for sure.
I'm really happy with where we're at, actually. I mean, I'm nervous because there's a lot of stuff to do, but... Yeah.
Okay, so then what I'll do is I'll be looking to interrogate this branch protection rule set that Git has and see what we can do, where the gap analysis is. I suppose that's where I would do. Based on our conversation.
Okay. Yep. Sure. And so, in terms of enabling your ability to, just make a pull request, I mean, all it is just that, fitting into those branch rules is all that is required for just simply pull requesting.
Right.
So
I'm just thinking to myself about how this would work in from an audit QA standpoint. So, from a bootstrapping point of view, we would have to QA the release procedure.
Right, but once we can build this on Dreamcatcher, the release procedure is smart contract based, running on the mainnet, and so it's predictable and it leverages the auditing that was conducted on the mainnet.
Correct. Yep. I'm just talking about the initial release procedure, I should say, the one before the Dreamcatcher, the bootstrap procedure.
Yeah.
So that's where I'm more concerned. So
yeah, I mean, we can just sort of pay an external auditor and be like, "That's bootstrap."
Well, that would be part of the funding model.
Yeah.
So yeah, I mean, these are all things. This is part of the checklist. So somebody says, "Hey, take my money. What are you going to do with it?" Like, here's the checklist of things that we need to get done: auditing, QA, bonds, enticing talent, advertising, marketing, so the list goes on. I mean, I can go on and on, but yeah, I mean, that's that we're talking about here.
Yep.
Okay.
Cool, man.
I understand.
Me too.
Now you've faded away into your green screen.
Yeah. Okay. I got 15 minutes. If there's anything else you want to go over, or
nothing comes to mind. Is there anything else that you want to talk about?
Nah, man. I'm stoked at the Guardian.
Good.
Stoked.
Yeah.
Oh,
no,
one more thing. Oh, sorry.
Oh, go ahead.
In the funding model diagram that you drew, can you explain to me again? I forgot or lost sight of what the liquidity providers, how that piece worked and why it was special.
That was crowdfunding.
Right.
So crowdfunding is people who aren't directly responsible or part of the shareholder structure or anybody who is just pretty much just off the streets. These people who are jazzed about the project or who want to contribute to the project but don't write code necessarily or anything else, they can contribute via funding in the liquidity pools.
Okay, now why are they not subject to securities laws?
Okay, so the liquidity pools is more of like a thing where, hey, you put your funding into this particular liquidity pool, and then we're going to take that money, and then we're going to go and invest it somewhere. And you may or may not make any money on that, but what we'll say is that you have a promise to get first dibs at whatever might come of this venture.
That sounds like a security, though.
It's not. Oh, it's a promissory note. It's a promissory note. It's like a SAFT.
Okay, so you could sell that to citizens of the United States, and the SEC would not kick down your door.
They couldn't.
Okay.
Because there's no. It's not like there's no enterprise in terms of like like, hey, we're gonna go out and launch to the moon and dig up all the resources and make $1 gazillion. We're not saying that. We're saying that.
Okay.
We're saying is that if you believe in this philosophy of this particular project,
right.
We need help being funding. And then what happens is that you would get part of the attribution of that funding.
So you would make a profit if you put your money here?
No, not at all. I mean, you would just get your name somewhere engraved on an NFA somewhere. Whether or not that NFA made any money or not, we can't tell you.
Okay,
we don't know.
So there seems to be two ways that you could buy an NFA that already existed. That seems easily not a security.
Right.
But you're talking about the liquidity vaults as being managed by us to incent NFAs that don't yet exist.
It's not managed by us. It's managed by smart contract.
So
it's decentralized.
So I put in my credit card. I say I want to fund my balance to $100, and then I then select which proposed NFAs I want to bounty against.
Yep, right? That's right. Yep. So you select what projects you find most attractive, and you want that to stake.
Okay, and it's not just projects.
And by the way, that could be for persons that are doing QA or writing code or something. Right. So it could be individuals as well. It doesn't necessarily has to be an NFA itself.
Is stake how is stake not purchase? Like, what does staking do?
What does staking do? Well, I mean, like I said, in the most classic sense right now in DeFi, staking provides liquidity. So what I do is I take two different tokens and I create an LP token, and those two tokens would then provide liquidity to those two pools.
So what are the two tokens in this model?
Well, it wouldn't be tokens. It would be whatever fiat they want to add to the pool.
So fiat, and what's the other side of the pool?
Well, I wouldn't know yet. I'm just saying that right now it would just be the fiat. The fiat would go straight to whatever liquidity pool they wanted to see funded and locked. This is, by the way, this is locked value.
Oh, so when we're talking about pool in this sense, we're talking about its locked funds.
Yeah, total locked value, TVL.
That only come out when conditions are met based on the smart contract.
Right.
Right. Okay.
That's right.
So, pardon me for running through example after example. I'm just trying to wrap my head.
No, it's all right.
Okay, so got my credit card, $100 balance. I see a proposed NFA for building a markdown document editor on the Dreamcatcher framework. I stake my $100 towards that NFA being generated. It's time locked for 30 days. If the software doesn't pass the decentralized QA test before 30 days, my money is returned. If it does pass the decentralized QA, I then own my fractionalized share of the NFA representing that.
That's correct. Yep, that's right.
Oh, that's pretty enticing.
Right. So let's say someone's working on something on the Dreamcatcher, like, hey, somebody needs some piece of code written, but they don't write code. But they see somebody else who's writing the code, and they wanted to contribute to that person who's writing this code, saying, hey, man, I want to get involved because I really need that code tool so bad because this is going to help me with that project over here.
Right.
And to entice that, you would stake that project, that NFA, to make sure that they get the money they need in order to complete it.
To clarify, on slide 1, the square that says liquidity vaults is not necessarily liquidity made available for our critical to function tasks.
Correct.
Moreover,
that's right.
It's like,
that's
how
right.
does
Yep.
anybody contract
that's right.
with the Dreamcatcher network as a whole to have any work done for them for any purpose, right?
That's right.
Okay, great.
That's right.
Great.
But that particular square was specifically to people who would think that the critical to function of the Dreamcatcher was important, that they were staking it. That was that particular subset. That was a subset of the population.
The subset of, so we've built some software that enables people to stake on any NFA within the Dreamcatcher, and that box was to represent the subset of those that also happen to be ones that we, the operators of Dreamcatcher LLC, have identified as needing being done.
That's right. That's correct. That's right. Yep.
Okay. And in this system, we sold securities to the investors in Dreamcatcher LLC. So if we cancel the SAFT contract and redo that to be basically, we are going to deploy the funds to generate NFAs that contribute to the critical to function features of the Dreamcatcher, right? Yep. So that's our obligation to the shareholders of the LLC.
Correct.
Then, as part of our critical to function work, we enable this ability for anyone to turn up with a credit card and stake for any kind of work at all. And then some of that subset will stake on the work that we have identified needs doing as critical to function. All of it goes through the decentralized QA process that we set up.
Yep. That's about it.
Okay, next question. how in the Dreamcatcher projects. So if I have a Dreamcatcher project and I want to receive funding, but I don't want it to be a security, I have to specify the work or the NFAs that I want generated, and I have to entice people to stake on those NFAs.
Well, that would be the share that you're willing to give up for your attribution. So
right. So as a project manager, I may say I want to keep it all, in which case I'm not going to accept
any funding. Yeah.
Yeah. Or I'm
willing to give up 60% for funding. And that funding would be, and I'm looking for, let's say, $1 million in funding or whatnot for this particular project, whatever it is.
Right. And the safeguard for the stakers is the fact that the NFAs are all run through this decentralized QA process, right?
Or that there are NFAs at all. Yeah, I mean, the fact that the NFAs come out of it, that's part of their...
Well, no, because you could do like completely worthless NFAs, but people who don't know about code wouldn't really know the difference.
Oh, I'm saying, yeah, I mean, you're saying the release procedure. Yes, of course. I mean, the release procedure would go through the decentralized QA system. But I mean, I'm talking about after it's been through that and it's been released and it's in the wild, then they have ownership of an NFA or partial fractionalized ownership of NFA.
Right. And I think that because why I'm asking these questions is I want to make sure that the liquidity providers are protected, because they will be people who are not skilled with code. And we have to protect them. We also have to follow the laws of securitization. And we need to go beyond that and actually help them get something of good value for their money. And so I believe that the decentralized QA process is the key to unlocking that safety for them, as well as making absolutely sure that it's not a security, because there's no common enterprise. It's kind of like the money didn't go to us.
No, we're very much in an uncommon enterprise right now.
Yeah.
Right.
Yeah. Well, I mean, we're talking about this funding model with the liquidity providers, right?
Right.
Yeah. And
it's uncommon. It's
uncommon. Yeah. The fact that it's NFA'd at all even grants you a certain amount of uncommonness. Okay.
Fractionalized NFAs.
Yeah, right. And then the protection of that QA pool means that you can earn money from providing QA stake, which is used to protect liquidity providers from being delivered faulty or substandard NFAs.
Or worthless NFAs, yeah.
Which I think is actually a critical to function thing.
Correct. Yeah, because I mean, per the NFT video I sent you, right? That's exactly what we want to avoid. We want to avoid NFAs that are just pointing to some sort of weird darknet address that may or may not exist in 10 years.
Right, or even just a bunch of code that if you didn't know code, you'd be like, it sort of looks like it's good, like... Right. Okay, so this gives us the QA incentive, gives us the internal renewal for quality.
Correct.
Like, you can't push shitty code into the system because the QA incentives are there that anyone who passes shitty code would lose their stake.
Correct.
If you're buying an NFA that didn't pass through this QA, then you can't say you bought it from us, because we won't allow our payment gateway to be involved in, right?
Yeah, exactly. And right. And if our NFAs get exploited, then it gets paid out by the insurance because of credit default swap.
Yeah, the insurance pays, and the insurance also has incentives in there to, if you find an exploit, you're probably going to earn more by disclosing and patching than by exploiting. Right,
and you realize that this starts up a sub-trading genre of derivatives for these NFAs. So
totally, man. Totally.
Because then you can sell your share of your credit default swap to somebody.
Yeah.
And they could buy it as a bond or some other NFA instrument, and then make that a securitized notes and actually pay out a monthly dividend to people.
Yeah, man. That's the yeah, absolutely.
Right.
You know, like you secure
because somebody can go around and hoover up just the credit default features of these NFAs and just say, okay, this is going to be monthly income, man. I can make something out of this. Yep.
This is starting to feel tight.
Okay. So is there any changes that you need to make on those documents?
There is, but I don't know how to do them in terms of changes. What I've tried to do was make a deck called Fundraising Without Conflict, where I'm at right now is from our discussions, from the deck you made, from talks with Scott, and from Ben. I have a very strong sense that I know what the funding model is, but I can't. It's not in any of these docs as a complete picture. There's just patches of it throughout.
Right.
I would like to get to a finished version of it, but I'm struggling with that. I'm fumbling through the fundraising without conflict deck. It sort of doesn't make sense. I guess I'll just keep laboring on with it. I mean, there is a finished model in here. I'm sure of that. I just can't get it out in one shot.
Okay.
So yeah, I couldn't tell you what changes I wanted. Sorry.
Okay. All right.
I know for sure that, having just finished saying that sentence, I can say some changes that I can see straight off. The liquidity vaults aspects, I think, would be presented as like phase 2 or phase 3. Like that's actually when the marketplace for labor kicks in. And so that's sort of the pitch to the initial investors, the conventional investors, is our first milestone is the operation of this. First we need the QA process, and then that enables this general, anybody can turn up with a credit card and get work done in this decentralized fashion. But that thing that enables the QA process plus the liquidity providing aspects, that's a bolt-on after the initial. So that's like round, release 2 or something.
Okay, so you're seeing the liquidity model coming after QA, right?
Yes.
QA first.
Yep.
Okay, so funding, you're seeing seed funding going into Dreamcatcher LLC. That Dreamcatcher LLC is a treasury that's going into a DAO. That DAO is saying we want QA work.
Yeah.
Funded.
First of all, it's going into conventional management, namely us specifying work to be done to create this blockchain with a DAO capability. Then that DAO is used to allocate funding to create NFAs that cause the QA feature to emerge. Then after that, the general purpose liquidity market opens.
Okay, so you're talking the seed funding bootstrap is conventional then, right?
Yes, LLC. The LLC is conventional.
Okay.
And it is a security for sure. We're not even going to refute that. And it's sold.
No, I'm not refuting that either. I'm just saying that because, we can cross that river when we get to it, because we can put in the SAFT and stuff after that and say that once the QA is set up and running, then the SAFT model takes over and people who are part of the LLC get first dibs, right?
No. I had imagined that you put your money into the LLC. We go out and make however many NFAs we can with that money. When we run out of money, we can either distribute the NFAs amongst the shareholders based on their shareholding, or we can do a second round where we raise some more money with a different class of share, and then we carry on trying to build these NFAs. But could you tell me what you meant by the SAFT? How would that work?
So we can't promise them the dream catcher. We can't promise them, but we can give them promissory notes to shares of an NFA. That's part of the core critical to functionality of.
So we're basically giving promissory notes to shares of all the NFAs that we produced.
Correct.
With their money.
Right. Okay. It's not a bulk. By the way, it's not a bulk attribution share. It's not like they would own all the NFAs. They would just own a partial stake in the NFAs as they're being created.
Right.
And the Dreamcatcher LLC, that contract would be whatever those conditions are. I don't know what that be, but it would be something a little bit more fair than what normally is, which is
So the key thing that you have to get over as an investor is the fact that we're aiming to produce a system for ambient attribution, which means that we don't set the attribution up front. It is set to something later. There is a recourse process. There is all that, but it's not a fixed percentage ahead of time. It comes after.
Right. The only fixed percentage is that this many shares will equal some sort of share of the NFAs, but that could be 3%, that could be 5%. We don't know yet, but it's just that means that.
Did you mean that a share in the LLC translates to a direct percentage ownership of the percentage ownership of the NFAs once the attribution has been allocated for them?
Correct.
Yep.
That's right. So everybody has skin in the game. They didn't write the code, but they do get a chunk of whatever the NFA is. In perpetuity.
And because they are independently transferable, even in part, when we run out of money, we can just divvy up the NFAs and then do another round starting from scratch. Like we're going to dividend out all the NFAs so that LLC holds no NFAs now and no money, and then we're going to do another round where we'll do this whole process again.
Yep.
Right?
Yep. And that round would own a smaller chunk of it, but they would own another fractional percentage of it.
Well, they'd be asking for new NFAs, so the percentage would be the same rules as what the first round was.
Oh, I'm just thinking of a situation where some work wasn't completed or not done yet, or
when you're stuck halfway over. Yeah, sure. It would be the same as if multiple.
So I mean, they would definitely get the bulk of any new NFAs that were created, but any existing ones they would get a small diluted or more dilute share of.
That'd start to look exactly like a multi-stake NFA where extra liquidity providers came in and put their money in on top of it too.
And that's directly those tranches is what I was highlighting in the slides, where you have an NFA tranche and the fractionalization gets paid out depending on where you are on the tranche and all that stuff.
Right.
So.
Yeah, I'll go along.
Because if you look at certain security tranches, people who put in certain amounts, like at certain levels, will always get paid first, and then as the tranche gets drained, or as the pool gets drained of that tranche, then the liquidity providers would be the last ones to get their share.
What I want the company to do is to continually purge itself of assets, because the asset is not the company. The asset is the NFAs that it owns, and I want to continually pay that out so that it's not held by the company. Right,
because you want the Dreamcatcher to distribute that.
Well, I want I want everyone to be one of these liquidity providers, but because we don't have the systems to do that, we have to manually make the initial investors be liquidity providers.
Right. Yeah, I know. I understand. Yep. And then at some point, that goes away.
At some point, the LLC completely dissolves.
Yeah, that's right.
The seed
And
funders,
the only thing left it would be liquidity providers.
yeah, man.
Yeah.
Yeah.
No, that's what I'm envisioning as well. Yeah.
Great. Perfect. This is fucking
No.
cool.
Yeah.
Right.
No. The idea is that you get to the point where you only have LP tokens or
Yeah.
LP providers or LPs, anything
Yeah.
else, and everybody's an investor at that point.
Exactly.
Right? And they're only investing in whatever they see is the thing that they want get done the most at that point.
Yeah.
And that may or may not include core functionality.
Right.
You know.
Right. And as a developer, I can come in and I can cut deals for I want to get paid and give out attribution, or I can just turn up and work self-funded and get all the attribution for me if I want.
Correct. Yep. That's right.
This is the thing. This is the thing. This is what we came to do. This thing.
Okay. All right. Does that help?
Yeah. Well, it feels like Christmas.
Well, it is. So there you go. Merry Christmas, man.
Yeah. All I want for Christmas is a liquidity vault.
That's right. That's right. And like I said, if you want to come swing around at some point, I can better show you. Staring at a screen isn't going to really cut it. Like you'd have to sit you down and show you what's going, what is about all these liquidity pools and how they function and what's going on. And it would just be easier to have an in-phase conversation of that than have to do that over Discord. And it wouldn't take long, maybe like 20 minutes for you to get your head around it. You know.
Okay. Sweet. I had better go.
Yep.
I'll stop the stream.
Okay. Yeah, I gotta go too. I gotta go start dinner again.